Hello everyone, I'm Andrzej Nedoma, your business coach and business advisor, and we are approaching the end of February when we discuss scaling and growing your business. And today's topic is very interesting. It's about sustainable growth versus hypergrowth. So which growth strategy, pace is the good for you? I think this is a very important question because I have so many friends and so many other entrepreneurs who are not friends, later becomes friends, who come to me when they think about getting investors on board. And they want to take a little bit of my experience. How was it when I had investors on board? And what does it take to work with investors? So hypergrowth is typically happening when you have financial investor. So hypergrowth is when you have someone who comes with a capital, so typically quite important capital, so injection of capital into your business so that you can accelerate much faster than you could if you would be sponsoring everything on your own. So sustainable growth, on the contrary, is when you hold all the cards and you generate profit, positive cash flow, net margin, and you say, let's invest the profit into scaling the business. And so you can auto-finance your development of marketing, go-to-market, lead generation, sales team, and expansion of your team to deliver on the higher demand. When you can sponsor this growth with your own resources, with your own revenues or profits, then this is like sustainable growth. When you want to grow faster, well, you have to accelerate. How can you accelerate? You inject capital so that you can scale your production, you can scale your sales, and you want to maintain the balance between the sales and delivery, but there's a much higher level than you would reach when growing only financing by yourself. So you can do it much faster. You can just jump to another level. And of course you need the capital. So this is when the financial investors come in. And hypergrowth typically would make me think about venture capital, because this is this type of investor who expect you to 3x first year, 3x the next year, 2x the following year, 2x yet of the fourth year. So they really want you to grow and provide the results that you would represent by the hockey stick, right? So something that goes really up very high. They invest in the money and then it goes like a rocket. This is hypergrowth. So what does it mean? Well, it means that you'd have the financial investor on board. It means that you'd have a shareholder that becomes part of your business. And I think this is huge change in how you behave and how you run your business. And this is important to understand this difference, because lots of the founders I know, before they get the investors, they do not expect what might happen after. They don't know exactly how this life will be. So let me share with you a few questions for consideration so that you can think about this and decide which speed of growth and strategy of growth is the right for you. When you have a financial investor, they have their game. Their game is their return on investment. So if there is a VC, they want to ensure that their investment really grows like a snowball, like a hockey stick, because they play venture capital portfolio investment in such a way, typically, that they hope that each of their investments can produce such a profit that it will pay the whole portfolio of investment that they do, so the whole fund. Because statistically, most of the companies that they invest in will fail. So they need to ensure that everyone that they enter into has the potential to pay for the whole fund. Okay, what does it mean? It means that really each of these companies is expected to run as fast as possible, which means very, very fast. So the question, and this is their game, so they are interested in seeing that. Now the question is, are you ready for that speed? And when I think, are you ready? There are several layers to this. First is, are you ready as a founder to now run and develop your business to the beat of someone else? So someone else, like the financial investor, gives you the beat, the expectation about the pace at which you should grow. Are you ready to accept that? If this growth is much more developed, much faster than you experienced before, are you personally ready to do this? And by the way, are you ready not to have all the cards in your hand, because you will be steered by the external force, which is these investors. Of course, you'll be the CEO, but believe me, the pressure on you will be huge. So are you ready for that? Then is your product ready for that? It might be even